Welcome back to another P2P talk. Today my guest is Zoy from Danarupiah. He's the CTO at the company. He's based in Indonesia, and today we'll be talking more about the risk management of the company and all the factors that you need to consider when investing in loans from Danarupiah. So welcome to the interview, Jimmy. So tell me, Jimmy, what is like your professional background?
I've been working on the IT part for about 11 years and do the IT management work about 7 or 8 years. And I joined the Danarupiah for 2 years ago, and in here I handle the IT part and also the risk control part bothly. And now I'm the CTO for this company. Yeah.
I'm a European investor, and for many Europeans, it's kind of hard to grasp what's going on in Indonesia. What's the lending business looking like? So can you give me like a broad introduction into how you issue loans in Indonesia and what's the lending environment looking like?
Okay. For my opinion, Indonesia it's a developing country, but growth very fast, and so the P2P lending, the so many some kind of this company comes to here, and the P2P maybe starts from 2017 or 2018, and there's hundreds of company growth up. And from 2018, in Indonesia, the government, which called OJK, something like the Central Bank of Indonesia, um, let every P2P company in here must got lessons from them. And for my information, there's only about 100, maybe 20 lessons in this company. So the the company always been watched by the OJK, the government. And for this year, we have already met the OJK government governors, and they have the yearly checking, something like that,
Mm-hmm.
because the government will check every company about 2 years, uh, once 2 year, and the government will make sure every company will run their business legally.
Mm-hmm.
So I think this P2P lending business in Indonesia is much more safer than I thought before I joined this company or I came to Indonesia. Yes,
Mm-hmm.
and
Mm-hmm.
I think that's what I thought about this business in Indonesia. Yeah.
Mm-hmm. So you mentioned the regulator gave out about 120 licenses. So Dana Rupiah is one of the companies. Where do you
Yes.
think is Dana Rupiah positioned in the when compared to the competition in the lending business in Indonesia?
Well, Danarupiah, I think for my information from maybe last month, we are the top 30 in this rank. Maybe the biggest in 2019,
Mm-hmm.
but in 2020, the COVID-19 comes and
Mm-hmm.
something pushed our business not so well, but we still uh, make our company great again.
Mm-hmm.
Something like
Mm-hmm.
that. Yeah.
Mm-hmm. How do you think Dana Rupiah is standing out from the competition?
Our company is the first group of the license getter. We get the license from 2018,
Mm-hmm.
and we are the beginning from this company. And from as I know, in Indonesia, if you want to borrow money, there's no one doesn't know Danarupiah in this
Mm-hmm.
company.
Mm-hmm.
Yes, we are the first group of startup company in here.
Mm-hmm.
Yes, so our broad is is famous in Indonesia. Yeah.
So since you have been on the market for a little bit, what's the performance of your portfolio looking like these days?
Our outstanding is about 220 billion Indonesia rupiah in for now, and
It's probably 14 million, no? Close to 15 million euro.
yes, yes.
So that's the outstanding amount. How much of that is delayed, and how much? What's the default rate?
The delayed, you mean the percentage of
Yeah, yeah, yeah.
the user? Yeah. For now, the current it depends on our product. We apply 13 days loan for the users, and also the install money like 3 plus 30 days
Mm-hmm.
or 6 plus 30 days. And for 30 days loan, the user doesn't pay us on time. Maybe it's 8%, and finally, after 30 days, the user doesn't pay us. It's about 3.8%. And for the
Really?
installment, yeah, for the installment loan, the due date doesn't pay about 24%, and after maybe 30 days later, he doesn't pay. It's about 11%. Yeah.
Single payment default rate 3.8%. Installment loans 11%
Yeah.
for the FPD. How much of the portfolio is currently in single payment versus installment loans?
For the single loan, I think for now, it depends on our business running. Before this year, July, it's about 50-50. And for
Mm-hmm.
now, it's installment, it's about 65% and
Mm-hmm.
35%. Yeah.
Mm-hmm.
The two kinds of products for user, the user can freely choose what they want to borrow, and our risk control will also select the user who is better for the different kinds of products. For our opinion, the good user will apply them to can select both of them, because the long terms loan will have the higher interests for his whole loan. And for not so really good users, we only supply them the single loans so that they can pay us more quickly. And after he give us the payment, we will uh, rescoring his score, and maybe his credit score will makes higher, and so that
Mm-hmm.
we can give him the two kinds the product at the same time. Yeah.
What's the retention rate of your borrowers?
Yes. Repeat percent, as I just checked my database, it's about 51% in this year.
51. What's usually how is the lending happening in Indonesia? Is it more offline based or is it purely online?
Well, in our data, it's about more than 95% online, because
Mm-hmm.
all the Indonesia people have their bank accounts. So they the bank also have the online disbursements. So it's easily for them to get the money and also pay to us. And they're about 2 or 3% user. Maybe they doesn't have the bank account, so they will pay us by the mini store.
Mm-hmm.
There's in Asia, there's some user doesn't have the bank account. They will go to the mini shop and give the money to the mini shop, then the mini shop will pay us.
Mm-hmm. Mm-hmm.
But it's only a little. Yeah.
Mm-hmm. So who is your target audience? I mean, you have scorecards, obviously. So who is typically lending money from Danarupiah?
For our risk control system, the user will, after the user registers from our apps, and he will upload his personal information, such as his ID card, such as the security number, something like that. And we will using our machine learning to check the user is good or not. And we not only using the user, he upload his personal information directly only in that kind of about 30 or 40% the user we have two the third-party vendors who can apply us the user's information in their database, and this is 100% legal in Indonesia, and the data company is also watched by the OJK, and we use the users uploading his personal data, and we get the data from his machine or maybe from his GPS and also from the third-party data, third-party company data, and combine them together to using our machine learning to give the users a score, and we will rejudge the score is okay or not every time every time before he borrow from us. Yes.
Mm-hmm. What about credit bureaus? Are there some credit bureaus that you're getting data from in Indonesia?
Yes, that's the interesting part in Indonesia. Every P2P license getter, the company who get the license must upload all your customer data to the P2P association and also the OJK. And if all the company can upload their loans data to the association database, and we can also query the association database from the associate database.
Mm-hmm.
Yes, and that makes our risk control more easier than other countries. Yeah.
Mm-hmm. Mm-hmm. What about salary? Do you check salaries or you don't?
Salaries for now, actually, you can get in our company. We're not getting the user's salary because we cannot really sure the data the user who inputs upload his salary data is right or wrong, and if we get from the maybe the security social security database, it will be much more expensive.
How can you evaluate that the user is going to repay back if you don't know the salary that the user is earning?
Well, it depends on that's the big data's power. So if if you have we can get your location, right? If in that location someone around you have great score, credit score, which
Mm-hmm.
means you have much more, you may be a better guy than other place, right? And
Oh,
maybe
really?
the score, yes, maybe the score will goes higher a little bit, but there's in our model, there's thousands of rules, combine them together, and finally we calculate it. And there's also we don't also trust the scoring model 100%. So we have some hard rules for the registers, such as if in the same location there's maybe 3 person at the same time and register our apps and want money, which means maybe they bad guys have a group sitting in the same room and want our money. So they're not really. And this kind of hard rules will have about hundreds of them. we just list them, and the user must pass all the hard rules, and finally we will give him a credit score. And if the user, for example, have 600 points higher than our credit score lines, he will get money. Below that, maybe you only have 599 scores. Maybe you can try next time. We will recalculate your data
So
again.
basically, if they have 599 points, they just need to move their village to a different location, and
Well, it's not such easy for him because we need to recalculate. Maybe you move to another village, their score goes a little bit higher, but that kind of rules goes lower. You can not still get our money.
That's the first time I hear someone is doing credit scoring based on geolocation.
Yeah.
So basically, you kind of gather information from your loan book and the performance, the historical performance of the borrowers, and then you add that information into your AI systems, and then you kind of enhanced the credit scoring with every new borrower, right?
Yeah. Not really a new borrower. For every time the guy who wants to borrow from us, we will recalculate his score. Yeah.
How many loans did you issue already, like in number wise?
This year, before the October, there's 240,000 people get loan from us.
That's interesting. So you is that data that you are gathering in Indonesia, the system? Did you build it from scratch in Indonesia, or did you copy something from other markets, or how did you develop it?
Yes, actually, this machine learning model is based on Indonesia, because actually, I think it's not the location problem. It's also about the time. The same model maybe works in before the COVID-19, but it's worse after the COVID-19. So we will redesign the model maybe every 2 or 3 months to change the model a little bit to make the benefits always on that lines.
So you mentioned you have some defaulted loans, like every lending company. How do you deal with defaulted loans?
Well, in this company, I think it's no worry about the user who doesn't pay. Actually, we have so many investors here, and the interest rate can cover the user who doesn't pay, and also the investor who have the cooperation with us. If the user usually the user doesn't pay us, maybe 60 days later, we will pay the investor by ourselves. So it's no worry about the money you cannot get back.
No, I understand the principle of the buyback guarantee, but I also more wondering about how it affects you as a company. I know that in other markets, they have some kind of soft debt recovery system in place, and after that they sell a part of the debt portfolio to some kind of debt collection agencies. How do you in the company deal with debt collection?
Okay. For the OJK's rules, the company can only collection the loans in 90 days. After 90 days, you must give the loan to the third-party collector team, and we use the both way. So in 90 days, we use our collection team to get our money back. After 90 days, we will let the third-party collection company to helping us to get the money back.
All right. So you mentioned you have a lending license and license in place, but there are no APR caps on loans in Indonesia, right?
APR, for APR, there's no rules in OJK or in the P2P association, but there's a limit for the all the company is 0.4% per day. So the APR would be
So 0.4 times 360.
APR would be 146 per year.
So that's the interest. That's the fee for the interest. But
Yeah.
you will likely have some additional fees for the borrowers, right?
Well, all the fees are contained in the 0.4.
Oh, really?
Yes. It's
Because
not only the interest and also the something like the developing fees, big data fees, all combine them together is 0.4% per day. Yeah.
Because when I look at the income marketplace and I had a look at the average APR that you are charging to borrowers, it's about 1,300%, 1,340. So where does that number come from?
Well, actually, that fee is the interest, but we just changed the calling of that. Actually, is the fees combined together, and we call it the interest rate.
Okay, so explain it to me. You're charging to borrowers 0.4% interest
Yeah,
per day,
yeah.
which equals which does not equal
146 per year.
136 per year, right?
Yeah.
So that's the interest that European investors are familiar with. But on the income marketplace, the average interest is like 1,300 something.
Uh-huh.
So what's the
Okay.
difference between those two numbers?
We have the installment loans, right? So the 0.4% is calculated by the first day. So if you pay us the first term of the installments, you pay the 30 days, the net amount you have already paid in 30 days, but at the second term, which means the 30 days to 60 days, you also pay the full amount, which calculates by the 0.4 percentage. So we calculate together, there will be much more higher than 146 per year. I'm not really sure I explained it well for you.
Well, if you have 0.4%,
Yeah.
then the annual rate is like you mentioned, 130 something, right? So that's the annual rate remains the annual rate, right? Unless
Yeah.
unless there is some additional fees after 30 days or after the borrower doesn't repay in time. Is there some additional fees that you're applying, or how come
Oh,
there is no way to come
if
to the
the
3,000, right?
yes, if the user who doesn't pay from us the first day after the due day, the user will pay double interest rate for his delay.
Okay, so that makes more sense.
Mm-hmm.
All right, let's talk about currency risk.
Mm-hmm.
You are borrowing money from European investors in euro,
Mm-hmm.
but you are issuing in Indonesian rupiah, right?
Yeah.
How do you handle the currency fluctuation?
Um, for now, the extraction, I think it's because our loan is 30 days, right? And the money will goes in here, and the rate won't go so much. I think it's stable in 30 days, or even our production for 90 days.
So you don't
So
have any hedge. You don't have any hedge, any insurances on currency conversions, right?
yes.
Okay. What about general country risk when we talk about corruption, political stability, etc. in Indonesia? Is this something that may impact or that negatively impacts the portfolio performance?
Yeah. For this, no matter the risk where it comes from, maybe sometimes our modeling is not so well, and sometimes the world is changing fast. The the data never tells the lies. So if we will monitor our data every day and maybe every hour, if the rates maybe today this user doesn't pay from us, we will handle that. Oh, is there something wrong? And we will handle it faster than your thoughts and make our modeling more benefits for this time of situation. Yes, that's. I think don't worry about our risk control system. It's worked for 5 years and doesn't have any problem for us.
How did the COVID-19 pandemic impacted your lending portfolio?
Well, COVID-19, when 2020 March or April, I think in Indonesia there's COVID-19, and so many users doesn't pay to us, and that will be a hard time for us. But when we found that there's risk for that, we gave the users more choice for them to helping them to pay from us, such as you can make the loan more longer, such as you borrow from us maybe 30 days. Okay, you don't have money now, we will split it your loans to maybe 3 or 4 parts, and you can pay 1/3 of your loan, and maybe next month you can pay the rest of them, to make the loans more longer, to helping the users to pass the COVID-19's risk, and also helping us to get money back. So there's two hands. One hand is the loans we have already give to the user and helping them to give us the money slowly. And also we will limit the new borrowers to we give the loans to them as the credit scoring I just mentioned. Maybe we will make the 600 credit limit line to 60/50. And below that, you can get money. Yeah.
You are funding your loan book purely from P2P investors, or do you fund it also from your own balance sheet, or how is the funding system looking like at Danarupiah?
We have, for now, there's maybe 30 or 40% that the capital is from ourselves, and others are from such as the Windows, the Busters.
Okay, thanks a lot for all the insights. For the ones who are watching, if you would like to learn more about how to invest in loans from Danarupiah, you can navigate to our review and have a look at Get Income. Thanks for watching, and I will catch you in the next one.